Good morning, good morning, good morning, everybody. Welcome to the King's Table, another episode number 12 of the King's Table. I'm your host, Ashish Nathu. I am joined by the one and only Maddie A. Aitchison from Sacramento, California, the Hero Hospitality. Good morning, Maddie. We also have the sage, Mike Ayala, calling in with his beautiful Investing for Freedom hat today. I love it. And also, Mooch just couldn't miss another amazing episode with us. Had to call in from his car. That's how dedicated we are to this podcast. Good morning, Mooch. How are you?
Morning. I'm doing good. I'm glad I could join, and feels like every once in a while I record as a Tesla talk, so it's like I'm feeling like a Tesla talk / King's Table today.
Yeah, well, today's going to be an interesting episode, everybody. Maybe we start out with sort of market outlook, market updates, what's going on within your business in terms of metrics that you're watching. What are you concerned about? What are you seeing happen? What decisions are you making that are affecting, your short-term, long-term decisions? What data is affecting your short-term, long-term decisions? And let's just kind of start there. There's a lot of economic turmoil still out there. I think the listeners could get a lot of benefit about listening about what are we doing every single day. So let's kind of go around the table. Let's start with Maddie.
I'm just paying attention to a lot of the data that's coming out right now. And, it's always a look in the rear view mirror for where we're at today, right? And, a lot of the lagging data that comes out really is a snapshot from, the last 3 months. And I feel like what we're starting to see come out is really what the Fed has been trying to do. But it's going to be really interesting to see how this kind of plays out for the remainder of the year and heads into 2024. So I'm just going to read off some data that I've been tracking. And most of my stuff that I track, obviously I look at a macro perspective, but a lot of it is on the real estate front, right? Because I'm always looking for opportunities as well as protecting potential downsides. Inventory is, starting to slowly tick up in certain markets. New listings, which obviously are a measure of sellers putting homes up for sale, were down again this week by 4.4% from 1 year ago. The total housing inventory registered at the end of September is up 2.7% from August. It's still down year over year, but again, we're starting to see a little bit more come into the marketplace. And the challenge is, a lot of homeowners are in a position where they're sub, 5% rates. And if, they were to move, they're going to struggle to find new properties that they can actually afford, right? So it's a weird scenario unless you're really in a distressed situation or position. Why would you want to move? And what is out there that actually entices you to move? Mortgage applications are at a multi-decade low. Hotel occupancy, I like to track what's going on in terms of travel and tourism, and we're starting to see occupancy is down 2.3% year over year. Average daily rate is up, which you would expect with inflation, but that's only up 3.2%. And then, of course, home sales data came out this week. Existing home sales decreased in September to a new cycle low. They declined 15.4% year over year compared to September of 2022. And 30-year mortgage rates hit 8%, which is obviously a new high. California home sales specifically 21.5% down year over year. And then I know Aaron just touched on this a little bit. We're actually, for a long time, forbearances were very low. Foreclosures were practically non-existent. And obviously you had a lot of those moratoriums that were preventing a lot of that. Once those were removed, we knew it was going to at some point start to maybe jump up a little bit. But the number of homeowners hit with foreclosure notices in the third quarter of this year jumped 34% from a year ago to nearly 125,000. And that is up 28% from the previous quarter. So I'm going to be very interested to be paying attention to, maybe you can speak to this a little bit, Aaron, on what you guys are seeing at Roddy's Foreclosure Service and a lot of the data that you guys are tracking. If that trend is continuing to pick up, being that you guys are on the front lines, you're probably going to be able to get a little bit more of a pulse than what we're going to, see come out in the next 3 months. And then, of course, affordability is still crazy low. You look at with mortgage applications dropping to the lowest since May of 1995. You talked a little bit about it, Aaron, on the episode with Vivek, and how that really has impacted the real estate industry with rates being where they're at. And it's so expensive, the housing market, that homes would have to crash 35% or mortgage rates drop 4 percentage points to make it considered affordable. And we've got a third of Americans earning $150,000 a year or more saying they're living paycheck to paycheck right now. I know you posted something a little bit earlier today on your Instagram. So to me, it feels like things are slowing and slowing relatively quickly. And it's going to be very interesting to see what November and December data kind of show, being that I think all of these rallies, all of these, things that we've been hearing for people talking about in the market, I don't think are going to come. I think we're now starting to see some of the pain mounting, and I think it's going to continue to trend in that direction.
There's a few things you just mentioned that I think are super telling and super wild, right? Like 8% 30-year mortgages, right? Highest since 2000. And I think I've talked about on previous episodes that like what happened, the rates were kind of always like that. But after September 11th happened, that was like the first time that the government said, hey, we need to really, really lower the Fed funds rate, lower than we ever have before in order to stimulate economy. And so prior to 2000, really prior to September 11th, 2001, the rates kind of hovered at these higher rates and in and out, and a 6 and a 7 and an 8. It was kind of like the way that it worked out, and then September 11th kind of changed the game. And so I think we're going to be waiting to see if, the future Fed, the future next 10 or 15 years, if it's going to be more similar to like 1990 to 2000, where it's just kind of more steady and it's higher rates and it's slower stimulus and lets kind of the system do its thing on its own, or if they're going to go back to lower rates in order to stimulate the economy and things like that. Because the only time we ever broke that 7-8 barrier was when the intentionality was to like spur spending, spur the economy. And so it'll be interesting to see what happens. I also think the statistic of prices need to drop 35% to make them affordable again. Like something's got to give, right? Or nothing's got to give and transactions just won't happen, right? So for transactions to happen, and maybe for the first time, since I've been in real estate, it's this crazy stalemate where people are like, they want to move, they want to sell their house, but they can't. And their best option kind of becomes, keeping the house they have or renting the house they have and going and renting a different one. But the option is no longer, we need to move, so we need to sell our house and buy a new one. And, I don't know, there's a recent chart I got to try to pull back up that just showed in 2023, we're going to have essentially the fewest amount of transactions than we've had over, X number of years, just a really fascinating number. So something's got to give or nothing's got to give, and it's just going to completely change the way of life. That we could just see, Fed policy like we had in the 90s, and that we could see just people. Real estate wasn't a giant business in the 90s. Real estate became a giant business after September 11th. It was always a business, but it became a giant business after September 11th. And if they go back, then maybe the real estate industry is going to be just nothing like people have seen over the last 5-10 years anymore. It's happened before. The world will be fine once they adjust, but a lot of people that have made their life and their living around real estate will have to make the big adjustment. My last comment to add to that, you talk about foreclosures. So the people from Bloomberg have been calling me a lot. So they're digging into statistics too, and they're about to put out a big article, and they're using all of our statistics out in Texas for it. But Houston, for example, right now has more foreclosure postings than they've had since the early 2000s, right? So it's the first, but it is the first time post COVID that the number of foreclosure postings in Houston is higher than it was pre-COVID. A lot of counties are still like they've ticked up a lot, but they're still not necessarily as many foreclosures as we had before the pandemic kind of changed everything. But Houston, Texas is the first one to go over the top. and you try to figure out what makes Houston different, right? And how can it be a leading indicator? Well, median income in Houston is much lower than a lot of different places, right? The price point of houses, it's still reasonable to find a $100,000 house there. It's still reasonable to find a $200,000 house there. A lot of listings like that. And so it's one of the lower income areas. And I think that when we're seeing that trend, we're seeing less conventional loans in default. We're seeing way more FHA and VA loans in default. It's been just going up month over month. And we're seeing it just on the lower end price points. Most of those people still do have equity, and it'll be a matter of people figure out how to help them get out of those transactions. But it's just an interesting thought that I hadn't been having until really even the last week of maybe this is the way it is for a while. Like for a while, 8% rates, 7% rates, and it was like that for the longest time. The biggest crisis ever, September 11th, changed everything, and then COVID changed everything, and now we're seeing like these really stumbling results. And maybe they'll go back to, hey, real estate doesn't have to be the stimulant of the economy.
Yeah, Jerome Powell said in his meeting this week, inflation's still too high, and he expects a period of below trend growth being much slower than people have anticipated. And I think that ties to your point, right? And the other thing, noting on what you said, Houston, Texas, 1 in every 371 homes right now, at least in the metro area, receiving a foreclosure filing. So interesting. But I was interested to kick it over to Mike and Ash on the comment that you said, which is this a new way of life? And how did you phrase that? Because I think that was a good kind of like, which one is it? And maybe as you pose that question, share what your thoughts are on which side are you taking?
Yeah, and I think, the way that I posed it is this kind of the new normal? Is this kind of the way it is? Is Fed policy going to just go back? Fed and government policy just going to go back to the way that it was in the 90s? That real estate doesn't need to be the leading economic driver for the economy, and it was a lever that they were able to pull after September 11th. But even then, it didn't work out right. They lowered rates. They told everybody, do cash out refinances on your house and go like buy toys and stimulate the economy. I remember the Fed at the time saying that. And then how many of those people got foreclosed on because they pulled out too much money, and then when prices adjusted, they weren't, they'd spent all the fake money. So, and I think, what side am I on? Up until a few weeks ago, I would have thought we're going to be like this for a couple years, and then they'll go back to drinking the Kool-Aid and lowering rates to stimulate economy and things like that. More recently, I think now, I know you probably want me to pick one. I think now it's probably a coin toss where it could go either way. And I would have said 3 weeks ago, I would have said like an 80% chance that 3 years from now it goes back to the way that it was, but it's going to be slow for 3 years.
I said this a couple of weeks back, I think on our episode, maybe it was on a different one, but this whole concept of, housing and the American dream and, how we got here. And I mean, I actually think that I think we're due for a deep change. And so Aaron, I kind of like what you're saying, and I agree with it in the sense that like, I've been feeling this for a while. Like, I don't think things are going back to the way they were before. And I think there's kind of an awakening around, real estate being that primary driver. I love that Aaron said it. And I think things are just going to fundamentally change. I mean, I think sometimes, people are early, but Ken McElroy has been saying this for years, that we're going to turn into a renter nation. And when I used to hear him say this in 2016 and 2017, I'm like, and Ken's like been a friend / mentor of mine for a while. And I remember asking him on the golf course in like 2019, I'm like, Ken, what do you mean? Like, how do we just go to a renter nation? And it's what Aaron's talking about. It gets to the point where like, there's this fundamental idea that, the average American, the majority of their net worth is wrapped up in their home. And that's a problem. Like, as real estate investors, we've been saying that from like a counter argument for a long time. Like, your house isn't an asset. And this is what creates so many challenges. And the other thing that I want to say quickly too, that I've just been thinking about, even when things are bad, and I don't want to downplay how bad it is, but like what percentage? I mean, Maddie, if what you said is true, like 1 out of every 371 houses is getting a foreclosure letter right now. That isn't a big percentage. And I'm not saying it doesn't affect us, but the reality at the end of the day is like, I remember in 2008, I was talking to my business partner then, and this is why I kind of said, I think we got to come back to our fundamentals. I remember talking to my business partner at that point in time, and his head was just in the gutter. He was like, man, people are losing their jobs and there's foreclosures everywhere and our business is going to die. And I was like, what percentage of people are actually getting affected by this? And I'm not trying to downplay the people that are getting affected, but what percentage of people are actually impacted? And what does that look like in some period of reset? And so I'm not saying that we don't have some challenges ahead, but also like, I think what Aaron said is brilliant. I think we had some really, really, really amazing years of intense leverage. I've been saying this for a while. We have been drunk on negative interest rates. Do you guys remember the conversation in the late teens about, negative interest rates and how long can this go on and modern monetary theory? And then all of a sudden COVID hit and it made us forget about all of those crazy conversations that were, what the big deal conversation was in the late teens? Social Security. And not to open up another can of worms, but when you look at like Social Security and how underfunded we are, and when you look at the fact that the average American has like $173,000 in their retirement account, I mean, literally the people that are like 10 years away from retirement, I think that average number, and I haven't looked at this for a while, I think the average number of the average American 10 years away from retirement has like 247,000 in their retirement. Like these are real problems that have been going on for a while. And then we just kind of forgot about all of this conversation, modern monetary theory, Social Security, the pension problems. Pensions are underwater and underfunded like never before. But we forgot about all of that because of COVID, and then cheap interest rates continued and all this free money. And so the one thing that I'm not saying is that I don't believe that we have a deep systemic problem, but I think Aaron nailed it on the head where, maybe this isn't really about real estate, and actually real estate's going to have some challenges. But at some point in time, we're going to have to get to some of the real challenges too, that I literally wonder sometimes if we're just so in this modern monetary phase that I think the question sometimes is, how long does this play out? Can this go on for 3 years, 5 years, 50 years? I don't know if anybody really knows. It's like, what's going to be the thing that pops the balloon? The reality is there's there's bubbles in everything. And I think we're actually in a money bubble. Like, I think we're just in a money bubble and it affects everything. And so, Aaron, I think what you said is brilliant. The last thing that I'll say, I mean, even Bloomberg, I was just looking at a Bloomberg survey that was done with economists from October 18th through like the 20th, or it's fairly recent. I think it was actually the 15th through the 18th or something like that. And what's crazy is that most of these economists actually are raising their US growth projections through 2024. Now they think that their growth is going to slow down, but they still think that we're going to be in a growth environment. And so what I'm really struggling with is when we talk about these fundamentals, and I mentioned this, and I think we should dive into it at some point, what are the key drivers in all of our different businesses that we really need to be paying attention to that are not like this macro news? Because I can get literally 15 different articles to support any bias that I want whatsoever. I pulled up 2 different Goldman Sachs articles from 3 weeks apart talking about a hard landing and a soft landing. So what that really says to me is the geniuses that run our country have no freaking idea what's going to happen, and neither do we.
I love it.
Real quick, what I do love is that we have Aaron, who, Maddie, as you said, I mean, Bloomberg's calling him saying, hey, we want some real-time data. So I think it's great that we've got somebody that's got the real-time data on real estate itself, and who's also saying maybe real estate, he didn't say this, but maybe real estate doesn't matter. I mean, in the big picture. So it affects all of us, and it affects people in their daily lives. What's interesting is a stalemate conversation, which Aaron brought up. My son, his lease on his apartment just came up in Austin, Texas, and it's $2,800 a month. And he went back, and there's 53 units available in this apartment complex on Zillow, by the way. And so they went back to their apartment complex and said, we want to negotiate a cheaper rent and we'll stay. And they said, you can't do that. You have to put in your notice and move out and reapply. And I'm just like, talk about stalemate. I mean, I put myself in the landlord's shoes and I kind of understand because, you know, if one neighbor gets to drop their rent by 400, then, but the reality is they're being unrealistic too about, they have 53 units available on Zillow right now. And they're going to let my son, who's never missed a rent payment, walk away. Talk about stalemate. We're in a really interesting time.
Real quick on that point, Ash, because I want to get your thoughts on it too. Just real fast. Is the American dream dead then?
No.
The American dream of home ownership might be dead. And by the way, I'm of the school of thought, not just because I'm a real estate investor, but I'm of the school of thought that maybe that was a bill of goods that was sold to the average American, just like a 401k, just like everything else that the Wall Street cartel, you know, has programmed and literally, what's the term that they use when somebody's like being groomed? I think it's groomed for like 50 years to be like a mole or whatever. Like they've been grooming us since the day the Federal Reserve was founded to think that the American dream is homeownership, when in reality, like I said a couple episodes back, the mortgage literally means till death, or do we engage, right? And so I don't think the American dream is dead. I think that maybe we need to rethink the idea of American home ownership being indebted to a bank for 50 years is dead and maybe needs to die. Maybe we need to shoot that philosophy in the head, and then people rent from us too.
If you pull on that thread and you think about that domino and how that topples so many others in the process of that idea of home ownership is dead, that would be a very interesting discussion. But Ash, what are your thoughts?
Well, you guys have so much residential market experience and knowledge, and I think the listener can get a lot of insight and benefit from all of this. On my side, you know, I'm very much in the hospitality market. I've been studying the commercial markets as well, and definitely just through conversations on the commercial side for just half a minute before we go to the hotel side, is that transactions are slowing down in every major category, including industrial, which I thought was super fascinating. Everybody thought post-COVID that even industrial was insulated from COVID and all the work from home stuff and all that, right? And reducing retail. So even industrial is being affected, which is kind of a scary thought if you think about it. So, and prices are still high on commercial properties. They're at least 30% too high, and prices are just not just going down. So I think that's just super fascinating. That's just my ground game knowledge. On the hotel side, and just general economy, I think is really interesting what's happening. So you said the word stalemate. And I think that what I'm observing, before I get into some data points that I'm looking at, is that a lot of hotel companies, commercial real estate companies, are in the business not only of owning assets, but they make most of their money when they buy and sell assets. And what I've observed is that real estate hides a lot of operational inefficiencies. Because when you can make big real estate pops in a buy and a sell, you can solve a lot of these operational inefficiencies of bloated overheads, poor management, poor operating management, things like that. And so what's going on in the hotel market is that, and this is nationwide, all different types of demographics, categories, 2-star, 3-star, 4-star, 5-star, it doesn't really matter, is there is literally a stalemate going on that nobody is transacting whatsoever. So there's no assets moving whatsoever. Now, the dynamics at the operating level are healthy. Maddie, you mentioned this a little bit. You know, the TSA checkpoint travel numbers are higher than they were pre-COVID, which means people are traveling through airports more than they were pre-COVID, both business and leisure. Okay. ADRs are higher. September 2023, US occupancy was 66%, ADR was 160%, RevPAR was 106. So all three of those numbers are higher than they were 1 year ago. So all the metrics are in the right direction. So the overall hotel market, throughput, travel, entertainment, all of that seems strong, which means people are still spending money, both personally and within their companies, to move and travel. I don't see that stopping. You know, unemployment is pretty much at the same rate as it was pre-COVID. So we're at like 3 point something percent, like super low threes. In some industries, like accounting is single, like 1%. So the pressure we're seeing in real estate, it's really interesting how we're spending. We've talked about this here on the podcast. Credit card rates are higher than they've ever been. Imports are really still strong. People are spending money. Amazon stocks through the roof. Unemployment is low. Travel is high. Like, what's going to fall, right? So what I'm seeing is just yesterday, PIMCO turned in $273 million of hotel assets that they bought like within the last couple of years. Just turn in the keys. Sorry, can't do it. So as interest rates increase, and you guys have said this on this podcast, the short-term financing situation, it's going to really hurt real estate companies. Their operating costs continue to increase. Their revenue continues to decrease. Their debt continues to increase, and they cannot transact. They cannot sell out of their properties to get out of their problem. So the pressure is going to start building. I'm seeing customers where nobody's doing any new builds. Everybody's doing renovations only. And the only reason they're doing it is because they have enough equity. They have to do it. The brand is forcing them to do it. So they're forcing to spend money to be competitive in the marketplace. But nobody's buying and selling hotels. So my thinking is, at least on the commercial side, is that in the next 2 or 3 years, you're going to see a lot of people turn in keys. They're just not going to be able to continue to own assets. And what's interesting is the hotel values are staying high. It's the only reason why these guys haven't gone out yet.
Yep.
Right? Is that nobody is saying, okay, you know what? I'll take a 20, 30% discount, get rid of this asset, stop the bleeding, and walk away at an 8% interest rate. Instead, let's just keep waiting. Let's keep waiting. And then it's going to build up this pressure. And a lot of a lot of commercial real estate companies are private. So we're not going to see this information until it starts to trickle. But PIMCO is not a small company. $300 million of assets. I think that was 20 hotels across the country in 3 different states, actually. So just fascinating what's going on. Yeah, so we're being cautious. Business generally, import, export, trade, demand is pretty heavy, pretty strong. Our estimating data is steady. The way we quote things, we have like a 18, 24, 36 month horizon because we have a slow cycle, as you can imagine. So things are not falling off the cliff, which means people are still interested in looking at doing things. But I think that the pressures of higher interest rates, higher operating costs are going to really smoke out the bad operators. So that's what I think. And I think we've said this on this podcast. I think there's going to be a ton of opportunity. I think if you can be patient and you can build up your coffers and not let your current portfolio implode on you, I think there's going to be a lot of opportunities. It's just going to be patient. And, or is it not going to correct and there won't be any opportunities and we'll just kind of ride this out? So who the hell knows?
I think one quick thing I want to add to that. I think Ash's comment is so accurate in the fact that in real estate, a lot of inefficiencies get made up for when you sell it. You're like, oh, I had lots of vacancy, I was losing money on it, so I got it 100% occupied, then I sold it. And so when that part of the real estate game gets pulled out, what we've had to do and what other people have to do is really dial into their efficiencies and try to figure out. It's the same thing when we do budget cuts inside an office or you do layoffs. It's trying to figure out what is the most efficient way to do it, because it gets rid of like spillage, it gets rid of excess, and that's probably good for all markets to happen periodically. But something that I heard somebody say this last week that I think makes a lot of sense that maybe be interesting to hear you guys on it. When bubbles pop, other things get affected too, right? So I think we all agree that there's like a commercial bubble popping. WeWork stopped paying their rent. Now they're getting sued. They announced that they're going to be, that there's very little chance they're going to be in business in a few months. And so there's like a $330 million lawsuit for just one of the buildings they exited in San Francisco where they turned the keys in. So I think all of us believe there is a commercial bubble popping. There is a commercial tsunami because of the cap rate changes for office, multifamily, things like that. And I think we've felt like, but it's not going to affect these other things because these other things are going strong. But I think it's important to remember, and maybe it's true or maybe it's not. Is the statement true that when bubbles pop, other things are affected, right? When a commercial
Yeah.
company loses hundreds of millions of dollars, where does that trickle down? How does it trickle down? So and or what do you guys think might be affected?
I'm curious, and David Sachs said this 4 months ago on the All In podcast. I'm curious if we're truly in this period of time where money doesn't matter. I'm curious if you see the Fed step in and bail out commercial real estate now in order, because I mean, if their job is to truly, try to balance it without having us go into an implosion. I mean, they're obviously playing a very tight fiddle here, but again, there's people a lot smarter than me that, maybe the bailout this time around is really just in the commercial real estate market. And Aaron, what I love about what you said too, though, is, I mean, even if that happened, it's not going to happen just overnight. And the effect of that, is pretty big. And so when we start thinking about, whether it's layoffs or, things slowing down or whatever those things are, I mean, that stuff begins to trickle down. I just messaged my operations manager on the manufactured housing portfolio and asked, what's our current collections? And they're 93% right now. And that's pretty normal for us this time of month. By the end of the month, we usually hit about 96. And so we haven't seen any downtick whatsoever. Like when we look at our core fundamentals, I haven't seen anything change. I have a waiting list, but we're in this affordable housing space too, that is kind of like, I'm not saying insulated, but when things are really good, people need affordable housing. When things are really bad, more people need affordable housing. So it's kind of like we get into our own echo chambers. But Aaron, what you were talking about, I just saw a stat yesterday, and Aaron, Maddie, maybe you know the answer to this too, but I saw some stat where like 1 million realtors are expected to leave the real estate industry in the next 3 months, and like another, I don't know, some same amount of mortgage officers. And when you look at that level of people that were closing transactions, even if it was only 3 or 4 transactions or 5, I realize the ones that are leaving are not the successful real estate agents or mortgage brokers anyway. But when 1 million people in any industry are not closing anything, to Aaron's point, I mean, that has to start to affect us in ways that we can't currently see. So that's the kind of leading indicator stuff that I love, even hearing Aaron and talk with this group about, because to get those indicators, Maddie, you were talking about lagging indicators, the information that we're getting from GDP growth and jobs data and all that stuff that's coming out from the last 90 days. Well, that's all important. But the reality is, like, what's happening today that's going to be affecting me 30 days from now. That's what I think we need to try to get, and obviously into the future. But I just wonder, back to Aaron's original comment, like, I just wonder if we are in such a modern monetary theory point that maybe, to Chamath's line of conversation all the time, so what?
Well, I think we also haven't expressed any metrics that are bad. Metrics are healthy, and yet nothing is transacting. Everything's at stalemate. The people that brokers, I think, business brokers, real estate brokers, investment bankers, everybody is slowed down big time. So the question is what is the impact of that? And will people just look past it and just say, okay, we're all waiting for the shoe to drop, but what if the shoe never drops and we just continue down, right? What if Mike's right? Hey, it just doesn't bloody matter. The reason why 1 million brokers are going to leave the market is because Maddie bashed on them last episode. That's exactly why they're going to.
Good. Get them out. No, but here's what I'll say to that. Whether it's to brokers, whether it's to anybody in business, whether it's to real estate investors, this is where your product and service just has to be a little bit better than the average mediocre crap that 99% of the marketplace puts out, right? Yeah. Like, if you're a little bit above average as a broker, you're doing, the lion's share of the business. If you're a little bit better of a mobile home park than the one down the street that's all dilapidated and beat up and has poor management and you're doing a good job, you're going to be more insulated, right? And that's where I think you just got to be. I remember one of my first mentors always told me, he said, if you want to succeed at a basic level in life and business, all you have to be is a little bit better than shit. And that always stood out to me, because when you think about what's out there in the world and the grand scheme of commerce and business and the world in general and the people who succeed and don't succeed, right? Going back to Aaron's comment of like that little tiny line of inches, oftentimes is just being a little bit better than crap, because most people just don't have that level of discipline, attention to detail, of focus, of consistency. So for me, I think it's a good reminder that in times like right now, especially, does it not matter? I don't know, but I'm going to treat it like it does matter. And I'm going to try and be that much better. Going back to Mike's, comment that's been ringing in my head over the last couple months of, wartime leaders versus peacetime leaders. In times like right now, it feels like, metaphorically, war is going on in a lot of facets of life and business and globally. And now is the time where you got to really lean in and be that much more dialed in, that much more disciplined, that much more organized, that much more intentional of how you're spending your money, who you're spending your time with, right? Like now is the time to really not say, it doesn't matter. It's the time to go, I think everything matters. And that's why we have to have these conversations and lean into this accountability, because it could be something that completely transforms your life. One little decision, one little relationship, one little opportunity can make the difference in somebody's life for the rest of their life. And these are the seasons when most people let the chaos throw them off their game, when the tornado is just spinning around you and all you can see is the walls of the tornado. There's people that know that even though this tornado is going on right now and I'm in the center of it, there's a lot of sunshine, there's a lot of opportunity, there's a lot of good things going on outside of this storm. And I think too many people get caught in the storm and can't see past it. And we're in a pretty damn big storm right now. And there's a lot of confusion of, what does this even mean? How does this all make sense? And that's why we do this show, right? Is to kind of sort through our own thoughts and other people's comments and thoughts, because these are the times that could just give you a little bit of an edge when most other people are just swirling around in the storm.
Yeah, if there is going to be a bailout in commercial, I think there could be, but it's only going to be a Band-Aid. It would be similar to the bailout that they did when all the loans were underwater in 2009, 2010. And they said, like, hey, we'll get you these low interest loans for a little bit, then we're going to tack on a second that you have to pay back eventually. And so some of them might, do that to avoid foreclosure, to be like, okay, because they're all upside down, that's the only way that there's. So I could see a bailout that way, where it just forces, a lower rate that gives them like a 5-year balloon or something, but has this second that needs to be paid off eventually. That really only solves the bailout. That's the way they've done it before with short sales, and it really only solves the bailout if the values come back to be sold, and I just don't see it happening. So I think there probably will be some sort of a temporary Band-Aid for it. But.
Well, I agree. Like, and the real problem that I agree with what Aaron said. The real problem is that, I mean, even if they do that, you said it'll be a Band-Aid. And the reason for that is because like rents are not coming back. Like we have way too much office buildings. And so all the fundamental things are broken. And so I agree that it'll be a Band-Aid. I think we're just in such this, I think we're in such an interesting time to where they're probably, and man, these guys are a lot smarter than me. I don't know a lot about this, but the reality is like, it ain't going to fix the problem, as Aaron said. What's interesting to me when we just, and again, trying to land this thing, I literally just saw a Wall Street Journal article or the Washington Post actually just put this out like 45 minutes ago. Biden just unveiled $106 billion foreign aid package. If they can create $106 billion for foreign aid, they can create $1 trillion to help our real estate market. And I'm not saying I'm not saying that I agree with that or that I think they should, or I'm not stressing my viewpoint. I'm just saying, I think we're in this period of time where like even wars, it's really interesting to me that we're like funding 3 wars right now. What does that do for us? It bolsters the economy. Like, I mean, we're just in such and by the way, these problems were created long before we decided to hit record on Riverside today. Like these are deep systemic problems. And the last thing I'll say, and I've said this before, every time we get to a period of time like this where real estate has to reset, which is what Aaron's really talking about, who benefits from that? The big banks. They just keep getting bigger. And so I don't know. I think this is, the Bible talks a lot about transfer of wealth. And I think these are just really, really smart people that are engineering transfers of wealth. And most of us are just sticking our head in the sand and spending money on our credit cards and going out to dinner, which is what Aaron's like. That stuff is going to slow down, but I just wonder if the fundamentals are not what they were, in 2008 when it comes to real estate specifically, or any of it. Cause I think just print more money. The last thing I'll say, I was just saying this with my kids in Kara the other day, and I've said it every year since COVID hit. Why do I still have to pay taxes if we can just print fake money? Like, I don't get any
question.
of this.
Let's talk about that.
Like, not that any of us on this call are paying very much in taxes because we're real estate investors, but I'm just saying, like, just print more.
It's a good question. So many people I have posed that question. There's not one person that I've seen a response given that actually made a lot of sense to me. And to the last point, and Ash, I'll kick it to you. I do agree with the government bailout on real estate, because it has been such an integral pillar of our economy for so long, and it could be a very monumental wave that does have a lot of impacts in other industries in our economy. I saw this was also another kind of little anchor point to why I think they would do that. We've been talking about there being $1 trillion in commercial real estate coming due in the next essentially 3 years, between multifamily and office space being kind of the two main ones. And the Real Deal put out a little article on this recently. The U.S. government has too much office space, millions of square feet likely going unused. And the U.S. federal government basically published a report that a Government Accountability Office report cited during a Senate committee meeting this month, that they found that 17 of the 24 federal agencies it sampled were using an estimated 25% of their buildings. And so when you think about the amount of, I guess, incentive that the government has, being that they own a big part of that $1 trillion in office space, they are going to have definitely a reason to keep that propped up, right? Whether it's getting used or not, or repurposed or incentivized to, utilize it in different ways. They're invested in commercial real estate more than the average American probably knows.
I think it's interesting. If there's a bailout, where does the money go? Right? So if there's a bailout, commercial real estate companies will lose all their money, give the keys back. Banks will suffer, and they're the only ones that have the power to get the money. So the government will bail out who? Who will they bail out? They'll just bail out the banks. They're not going to bail out us. They're not going to bail out small business owners across the country. That party's over, right? We already got the PPP money. That was a once flash in a pan time where that money trickled so quickly to small business. But if there is a bailout, where is it going to go? And yeah, Mikey, go.
I know you wanted to move on, but what Maddie said, Vivek said this when we interviewed him last week. He said if he gets elected, he's going to decrease the budget or the government by 75%. And the first thing that popped in my head, by the way, I don't disagree with him. I'm not sharing my point on whether I think he's right, or I think he's right. Like, government waste, there's waste everywhere, as Maddie was saying. But when I heard that, I'm like, oh my God, if you lay off 75% of the government, can you imagine what kind of problems that creates when we talk about, Aaron talks about like people not spending money at the movies and rents, and how many government officials probably rent their home from people and, are not going to be like, where are all these jobs? We have so many systemic problems. And so when I hear that, like, I'm going to gut 75% of the government, I'm like, oh man. But the other side of that equation, and when I think about it, even what you were talking about, Maddie, with buildings, there's a building that a good friend of mine owns in Nevada that he has a 20-year lease on with the government, and the government stores seeds there for reseeding like sagebrush and stuff. Like, I'm like, why? 20-year lease that they pay like $20,000 a month to just store seeds. And I'm like, and they're not even like active seeds these are seeds that they have around long-term that need to be climatized and all this stuff in case they need seeds for sagebrush. Like, why the hell are we planting sagebrush? It's crazy to me, but that's the kind of waste that goes on out there. But the other side of the argument, when you got 75% of the government, that's a lot of people that are now employed. So I'm just like, dude, I don't know where this ends other than, I mean, what's going to be the needle that pricks the
Mikey,
balloon?
Look at this too, okay? If you look at the last 6 months of employment change by industry, one of the top places we're adding jobs is the government. So not only is the government bloated, you look at non-farm jobs, look like 1.4 million non-farm jobs were added. This is in the last 6 months, okay? But if you just look at this chart, because the numbers I think are abstract, it doesn't really matter. But look at it. Service providing industry is probably top. Private education and health services, number 2. Leisure, actually, and then it's government. The third industry that has the most jobs being added in the last 6 months, where we have more debt than we've ever had, we're printing more money than we've ever had, is in the government. Scary. So is it a self-fulfilling prophecy? Are they just printing their own money so they can just continue to do it? So I don't know. Students has got to have an opinion about that.
Yeah, I mean, Powell said in his address this week, he said that we know, and this is coming from the Fed, we know that this, fiscal path that we're on is ultimately unsustainable. But then he moved on very quickly. I was like, "Oh, okay, yes, I agree." But what do we do? What are we going to do about that, Mr. Powell? Like, to me, going back to this point that Mike has said, right? There's so many systemic, issues in this machine of what we've built in terms of the U.S. economy, which really drives and dictates so much of the global economy. And there's so much, integration between all of these different facets of how this economic machine works, that it's kind of like, the medical industry giving you one prescription to solve one problem, but as a result, it creates 2 more symptoms of something else that then you go and try and treat those things. And it's right. It never actually solves the real problem to getting us back to true health, And so it's one of those things where I'm going, how in the world do you find a way to solve some of these major systemic problems? And no one really has a concrete plan for how you can do that.
Mike, I think that we could, the why does it matter, or maybe it doesn't matter thought. Chamath said this a few weeks ago on his podcast, but how can it not matter?
Well, I do. It matters at some point.
When does the crow come to roost, man? There's got to be something that just smacks us around. We just maybe don't know it yet.
Well, Matt King he spoke at our couples event last year, and he sent me this economic clock. Maddie, I don't know if you've seen that, but and I won't go into the weeds on this, but it's basically an economic clock of, 12 o'clock is the top of the market, 6 o'clock is the bottom of the market. And he made this comment. He said, we're not trying to time the top of the market or the bottom of the market. I just don't want to be buying when we're like coming up on the top. But you're not trying to time it exactly. And that made so much sense to me. But the reality is, like, back to your point, it matters at some point. But the reality is, like, we have no control over what that point is. And so I think it comes back to the fundamentals in our own lives, not getting over our skis, making sure that we're collecting rents, making sure that we're doing good, solid deals. Aaron and I, he mentioned this in a previous podcast, but there's a guy actually in GoBundance that is in a second position on a portfolio of loans that's kind of in bad shape. And when I was talking to him, like, in his mind, he's not in that bad of shape, but I literally had Tim go through and give me Zillow data and the last time they were sold and what does it rent for, and it's not in great shape. And so I think it comes back to our fundamentals.
Pride, Mikey. Pride.
Or even even just, again, trying to time it or thinking that things aren't going to change. And the one thing that I realize right now, in my portfolio, what's the most important thing that I can do? It's collect rents. It's keep occupancy up. It's take care of existing tenants. Like these are the things that sometimes when we get into these like 30,000 foot, macro conversations, like I forget to ask my team, hey, are we staying on collections? Are we selling homes? Are we doing the things that we need to be doing? And so, Ash, I don't want to get away from the thing that you said, because at some point in time, it does matter. We just don't know when it is. I don't know if it's 6 months from now. I don't know if it's 6 years from now. And if it's 60 years from now, and we're the doomsdayer that is like, oh, don't do anything. Don't buy real estate because in 6 months, there's going to be blood in the streets, and we don't do anything for 6 years or 60 years, then you wasted, so much opportunity too. And that's why I brought up the economic clock, because I don't think that any of us in this circle are smart enough to know when that actually is. I don't even think the Fed is smart enough to know. Or again, 74 economists from Bloomberg were polled in the last week, and they have positive outlooks for the growth of the United States in the next year. And I'm
Crazy.
like, they're obviously a lot more educated than I am. And so I don't know what it is other than just come back to those fundamentals and just try to live. So I want to make it clear. I'm not saying it doesn't matter. I'm just saying that like, it doesn't matter until it does.
We're behaving in a way, right, Mike? We're behaving in a way that makes it look like it doesn't matter. The economy, the government, the people who are making these decisions, I think that's what we're talking about, right?
Well, and even getting stuck. So let's talk about the real estate, the housing again. And I brought this up a couple of weeks ago, but I've dug into it more. 37% of homes in America right now don't have a mortgage on them. And also,
really,
if you look at right now, the average equity, and this is as of the beginning of 2023, the average US homeowner now possesses more than $274,000 of equity. Now that's average, obviously.
That's average.
But things have to really, I'm not saying that things aren't going to be really painful for a group of people. If you're losing your house, I'm sorry to hear that. If you've got problems in your business, I'm sorry to hear that. But 40% almost of houses in the United States of America don't even have a mortgage. And the average has $273,000 of equity. And so if the median value of a home in the US right now is $400,000, then the average home has $273,000 of equity. So I'm just like, and that includes the ones that are paid off. So, the numbers are skewed, but what I'm really getting at is like, yes, there's houses that are over leveraged. There's people that are underwater, but I don't think in the overall perspective, real estate is in that bad of a situation long-term.
I don't think so either.
I have a question. That's a really interesting statistic, Mike. I wonder the age distribution of that ownership and those mortgages. Meaning, are these baby boomers that have no mortgages and high equity in their home? And if, let's assume that is, I'm trying to find it as we're talking, but if that's true, then are we creating a generational problem that we're just delaying for 20, 30, 40 years? And adding all this debt has to be affecting somebody. It may not be affecting 10 years, 20 years, but what happens 30, 40, 50 years? What happens to the 16-year-olds, right? When they retire? So are we just ignoring a big problem and behaving in a way that, we all have, the United States, the real 2% of the wealth in the United States has a ton of equity, has had 2 successful cycles, has made good money. Unemployment is super low. But what's going on with the younger generation? If they can't afford homes, what happens? If they can't see wage growth, what happens? If they can't employ people and start businesses, what happens? If they can't get into the real estate game early because it's too expensive or too difficult, or there's no opportunity to transact, what happens? So I just fascinated. I don't have the answer, but just fascinated. Is there some generational thing going on? I don't know if you guys want to comment on that.
I agree. I mean, I think your assumption is correct, right? Is most of those homes that are paid off are most likely going to be boomers or Gen Xers. But I do think there is a different mindset and mentality, as there is with every generation, in terms of what they value. And, when you think about the younger generations, millennials, Gen Zs, now the iGen. You've got more and more of these generations that value less of what, the historical kind of path has been to the American dream, which obviously included homeownership. A lot of it included college. A lot of younger generations are looking differently now about college, about home ownership, about, ownership in general of things, right? And being more nomadic, being a little bit freer. They value experiences over possessions. And I think we're just at the tip of the iceberg on that. But I also think, there's also other things that we can't necessarily foresee yet in terms of what they value and how that's going to play out in the economy and in, American culture and society as a whole. Being that, they value things in technology different than a lot of people with, I guess that established wealth and financial capacity do. So I'm very interested to see what, again, like you said, those future generations put their money and their energy towards. But I definitely think there's a big shift right now. And it feels like there's a resetting of a lot of things in the world and society and culture going on right now that feels like maybe it's too early to tell or pinpoint, but it feels like there's a major shifting of the tides right now in a lot of areas of life.
Do you guys remember in COVID the that dystopian article that came out by the World Economic Forum about how in 2030 you'll own nothing?
Yeah.
Do you remember that?
And
so there was and be happy about it. And so there's this article that basically said, we're going to get to a point, and they said whether it's 2030 or whatever, it's irrelevant, but where you kind of share apartments. So, because you work in the daytime, somebody else works at nighttime. And so you'll just kind of share an apartment. Or if you want a blender, you call down to the person in the condo and they bring you up a blender. Anyway, the premise behind this was like, we're moving to, as Ken McElroy said, a renter nation. Like you're going to own nothing. And when I'm hearing Maddie say this, like I actually think that we might be moving to a point in time where home ownership doesn't matter. We might have a generation where home ownership doesn't matter. We might have, maybe it doesn't matter. And, when I was looking at some statistics on home ownership too, and so the rate's around 64%. This is some interesting stuff. So Black Americans are 40% less likely to own their homes than their white counterparts. In 2019, the national home ownership rate for the first quarter of 2019 rose to 65.1%. It's dropped substantially since then. But this is what's interesting. Nearly 75% of white households outright own their homes. I'm like, there's so much, like when you're talking about like that older generation of like baby boomers that are transferring that, because I've been thinking about the same thing since I heard that stat, I don't know, 4 or 6 weeks ago. And the reality is a lot of that's going to get transferred. Some of it's going to get wiped out by tax. But, a lot of these people aren't, they're going to be under a certain tax rate where it probably doesn't matter that much. What I think is interesting for real estate in general is a lot of the people that are inheriting these houses from their parents probably aren't going to want that house that's in, Middlefield, Ohio. Yeah. And so they're going to sell it, and some estate attorney is going to sell it, and it's probably going to lower the values because they're not going to probably get full value out of it. Some real estate investor is going to buy it. I was talking to, I think I brought it up on this show, but I was talking to a guy that is actually the land developer for a big construction company in the Phoenix Valley. They're buying as much land as they can right now because they're saying, whether we turn it into build to rent or build to sell, we need housing. And I think the whole build to rent thing, if there's one thing that I'm sure of is that we need more housing. Yeah. What's it going to be that creates affordable housing? I don't think it's going to be investors that buy 1 or 2 or 3 properties. I think it's going to be the big behemoths that have access to cheap money that can buy rental properties. We're going to move, as Ken McElroy said, to a renter nation. And the World Economic Forum kind of just painted this dystopian idea in a way that makes it sound too unreal to be real, that we're actually going to get to. You're going to own nothing and you're going to be happy about it.
Yeah, it's not an unreasonable argument, especially given the way that young people grow up today. yes, they consume quite a bit, but they're so efficient with technology. You can get anything at your fingertips. So, it's just a stimulation of the gig economy. People can have multiple jobs, multiple businesses from their cell phone. It's just going to be a different life for that future generation. So it's not out of possibility.
Well, I saw on Canada today put out something that they were heavily considering and going further into discussions around universal basic income. I know other, people in the US have talked about universal basic income as well. I've heard the topic come up more and more and more, with affordability being such an issue. And when you think about some of these trends that we're talking about, right? You don't need to own everything, or you own nothing, and you don't have this incentive to go out and build and to innovate and to create in a lot of areas of business and commerce, right? And then you think about some of the mindsets and the trends of what is becoming more and more popular or just normal for younger generations. Universal basic income, even though it scares the shit out of me, becomes more and more of a potential reality for how this economic machine continues to get supplemented, with the top owning practically everything and everybody else being okay with that, as long as mentally and physically, right, I have what I need with, my basic income coming in and my needs being met. I'm okay with that, right? And I see more and more of that mindset and mentality creeping into younger generations. That's very interesting and scary to me. I will say that.
It is scary.
That becomes more and more of a logical solution to many people when they're faced with a lot of the challenges that they're faced with today, and are going to continue, it seems like, to be perpetuated, as time goes forward.
Okay, let's I want to get your guys' comments on what's going on in Israel, the capital, all that. So Mikey just mentioned too that Biden just signed a request to go to Congress for $106 billion for funding for Israel and Ukraine. A few hundred protesters swarmed the Capitol yesterday to protest. I'm not sure what exactly they're. I guess they're protesting a ceasefire. A lot like January 6th, people just stormed in, big banners, a lot of chaos. 300 people were arrested yesterday. It's getting worse. Nothing's slowing down, man. It's getting worse. They've announced, Israel has asked the people in Gaza on the north half side to come south so they can basically go in a ground attack. It's bad, man. It is getting worse. So just love to close out maybe with these thoughts. What are you guys watching? What are you seeing? And any final thoughts as we close? Maddie?
I'll just close it with this. I've actually really kind of tried to take a pause in holding certain opinions on things around this right now. One, I saw somebody's post the other day, and I'll try and pull it up. It resonated with me in a lot of ways, but I've been seeing a lot of propaganda coming out on both sides, a ton. And so it's really made me, you've got you got AP Politico, you've got the Washington Post, you got the New York Times that are posting certain things and then retracting comments 6 hours later and posting something else out. And when you talk about wartime propaganda, like that shit's real, and we're experiencing it firsthand right now today.
Real time.
And all it's doing is, and it goes back to that quote that I had said, I think on, a week or two ago, around how people who want to be more informed by reading the news actually become more misinformed, and how dangerous that can be as a whole. And so right now, it's still heavy, right? Like if you have a heart and you're a human being and you care about humanity, I think it's important to have empathy for everyone that is caught in the crosshairs of this. And at the same time, I'm really trying to take a step back and make sure that what I'm forming my opinions around actually are rooted in some level of truth and warranted with accuracy. So that's kind of where my head's at with everything. But all I know is I was born on Earth. My ethnicity is I am a human being. My religion is love. And in this capacity, right, that's what I'm trying to lead with. Of course, I could take a more granular approach to that, but I'm trying to be macro in the sense of going, there's good and there's evil. And there's a lot of, innocent people that are caught in the crosshairs of this. And the government and the media are doing a damn good job of fanning the flames of intensity and fear and anger around this, instead of really doing things that I think are more based on unity and finding a solution. So it's unfortunate, man.
Mikey, bring us home.
Yeah, I agree with Maddie. I mean, even when you're asking the question, I'm like, I don't. It's such a complex issue that I don't have an opinion on it. And again, I just kind of always come back to like, how I'm not saying that we shouldn't do anything about it, but like, I don't know how, my opinion about what's going on really makes any difference, other than my daughter is in Bosnia, as I said, and she's supposed to go to Lebanon next week. And I'm like, is what you're going to Lebanon to do worth the risk that's there right now? And that's kind of like, that's what I'm thinking through the lens, because I mean, they just moved it from like a level 3 travel advisory to a level 4. They're evacuating, non-key personnel from the embassy in Lebanon. And I'm just like, I'm not saying that I want to put my head in the sand on things that don't matter to me, but my opinion doesn't really change anything about it. And I don't know how valuable it is to our audience either. And the last thing that I'll say on that, I actually had a guy on my podcast yesterday who's a psychotherapist from GoBundance. And I was asking him questions because I just finished reading Deep Work. And I think there's some maybe value into this for the audience in times like this. Cause like Maddie said, he's tried to refrain from looking at the news too much around it or commenting or whatever. As I was talking to this guy, after reading Deep Work, I've even gotten to the point where I want to start filtering the news that I'm watching on a daily basis. And so I was talking to him. I said, I've been thinking, Tim and I've been talking about this, like getting a VA to do research for me. I'm getting the information that I need without having to comb through all of the information. And you know what the psychotherapist said to me? He said, that's probably not going to work. And I'll tell you why. Your VA has their algorithm on their computer, and the news outlets are going to show your VA what the algorithms are programmed to show your VA. And it's probably not going to be the type of news that you want to see. And I'm like, and he said, it's so biased and they're so intelligent now that literally they're showing you. And I think that's a lot of what has to do with even like, Bloomberg showing me one article this day and another article. Like they can literally show us what they think that we want to see based on what we watch. And so the psychotherapist was telling me, I don't disagree with you, but you're probably not going to get the information that you actually believe in or need if you have a VA getting it. And I was like, that just shows how freaking biased all of this is.
Well, I think to close on that, I'm actually glad I asked the question because I wanted those responses. I think it's really important for people to realize that the entire media system is designed to be binary, to pull you left or right, here or there. Take one side. There's no human side. There's no earthling side. There's no love side. There's a pick a side, bloody hell. You need to be on one side. If you don't have a side, what's wrong with you? And I think that's what I love about, I'm glad you guys both answered it. It almost validated. It was like a trap question.
How dare you?
It just proves the value of this group. It proves the value of this conversation, because none of us fell into the trap of, oh, well, I mean, can you believe this or can you believe that? And no, we just transcended right above it. And I think that's what people need to hear more. Be careful what you watch. Have a filter. What is this person trying to tell me? Are they trying to convince me of something? Are they trying to bias me of something? What are my natural biases as I read this? Man, Maddie, you said it beautiful, man. We are born on earth. What did you say, man? You're born on earth. Your religion is love, and I'm a human being. Maddie, I'll give you the last word.
And he's Mexican.
I took my 23andMe and I thought I had like a little bit of mud in me. I am as Eastern European as they come. I'm like 99.9% validated as a freaking Viking, baby. So here I'll wrap up on this. And it was a conversation. So I was having a conversation with my wife, Marie, and I come in the house and she's sitting in my brown chair, which is my cozy kind of thinking spot, and she's crying. And I'm like, what's going on? Why are you crying? And she proceeds to tell me that she saw some video of a little boy that's like 3 years old, that is basically in the war zone. He had lost both of his parents. A doctor grabs him and this little kid just starts breaking down and crying, and she's watching this and she's crying and she's like, I'm so sad that so many innocent people are hurting and are, caught in this mess, and they have no chance whatsoever, no choice, no chance. And it really made me like take a step back and think and reflect. And I shared this with her. I said, one, it is horrible, and I do empathize with that. And two, this is going on every single day around the world to millions of people. And if you're somebody that is listening to this podcast right now, if you were born in America or live in America or you're in a developed country in general, you are statistically one of the most privileged and luckiest human beings on planet Earth. And so when I think about that, going, okay, I fall into that category. And I said this to my wife. I said, one, we can still love, and empathize with those people that are going through that. Unfortunately, there's few things we can do to truly impact that change. But here's what we can do is we as human beings, this is why it is our obligation to go out every single day and live our best life, to push the boundaries for ourselves, for our families, because whether you think you have an ability to make an impact in this world or not, a little ripple effect like that, you have no idea how far you showing up on a daily basis, grateful, intentional, purposeful, going out to grab life big as best as you can to your own ability has to make a difference in this world. And when you do that over and over and over every single day and see what that compounds to at the end of your life, I think all of us will be shocked at the ground that we've covered, who we've become, and how many lives we've changed and impacted in the process of that. It may feel insignificant every single day you try and go out and do that, but when you string that together over an extended period of time, it is unbelievable what that story can turn into. And many people who are considered icons and legends in history said that on their deathbed. I had no idea what I was going to accomplish while I was in pursuit of trying to accomplish it. And so that was kind of my message to her. And I would say that to anybody else that's listening right now, is if you're listening to this, and you feel the weight and the heaviness and the sadness and the anger and the frustration that's going on in the world right now, it feels like it's definitely amplified more than it has been in recent history. That should be one, a reminder to thank God for your lucky stars and count your blessings and be grateful, and also to light a fire underneath your feet to go, damn, I am so freaking lucky that I even have the opportunity to live this life. And who am I to sell myself or anybody else that I might be able to touch along the way, short of me going out and grabbing life as big as I possibly can today. And that is what I told my wife. It's what I told my girls. It's what I'm telling myself. And hopefully anybody that's listening to this, that can resonate with you as well.
Received.
Maddie, spot on, man. And I was just thinking too, like when we think about like impact, I mean, even the propaganda of the World Economic Forum, like you'll own nothing. I'm going to find this episode, but when that came out in 2020, I remember doing a podcast then. Somebody's going to own all of that. And that's the thing. Like, it's all about our mindset. And Maddie, you just beautifully said it. Like, I mean, even with that, you can buy into that you're never going to own anything, that home ownership's dead. Being able to build wealth is dead. All of that's dead, or you can get on the right side of that too. And maybe 90% of people aren't going to own anything, but somebody's going to own all of that. And I just want to be somebody on whatever it is. So beautifully said, Maddie. Love it.
Yeah, really beautifully said. Love you guys. Great episode. I'm going to ask the audience to do me a favor this week. I want everybody who's listening to this episode to go on all of our Instagrams and follow us, number one, because we're all producing really good content that continues to and encourage the conversations we're having here. Number two is go to all of our podcasts and follow and like and leave a comment on all of our podcasts. Leave a comment on what you like, what you don't like. And I've said this before, if you're not enjoying the conversation, stop listening. But if you are, then make sure you share it with somebody, because that's the cost of listening. So great conversation. Love you guys. Great episode. See you later. Peace.
Peace.